let me reintroduce Chetan Parekh, who is going to host our final panel session of the event.
Good afternoon, everyone. So it's a most, I think, last but the interesting panel. May I welcome you into a panel around banking as a service, embedded finance, and open APIs. Let me just call upon my panel members. So first one is David Jarvis, CEO of Griffin Bank. David, welcome to the stage. Yeah, please. Next, let me invite Paul Staples. Paul is a group head for embedded banking at the Clear Bank. Paul, warm welcome. My next speaker is very interesting, Government Blockchain Association and a CEO of Earth ID, Priya Guliani. Hi, Priya. Please. My last speaker is Wayne Foster, at Ecosystem Support Specialist from OBIE. He's an enthusiast in this area. A very warm welcome, ladies and gentlemen. So David, I'll start with you. You build a very, very interesting bank, and we'll all like to hear from you, how do you see at Griffin Bank? And when you say banking as a service, if you can explain to the community what it means, and how do you see the role evolve in the financial ecosystem?
So maybe for a little bit of kind of personal background, because I think it flows nicely into this. I am perhaps obviously from the dress code, not a banker by background. So my background is West Coast software startups. And one of the companies that I worked at in 2014 to 2015 was in the business of selling API platforms to banks that would then be used to distribute banking services to fintechs. And the takeaway that we had from that journey was that there was going to be incredible demand from, if not just fintechs, from technology-enabled corporates more broadly for programmatic access to their banking services. They would want to both be able to offer and embed financial services products, but also to bring automation to corporate finance operations more generally. But that if you were trying to solve this problem as a sort of pure technology layer without really understanding what it was to be a bank and all of the risk management that comes with that, you would be very poorly placed to actually deliver value or capture it, right? So not going to serve your customers well, and you're probably not going to be a very valuable business. So the conclusion we came to was, if you want to solve this problem properly, you need to be a bank. As you can tell from the accent, I hail from distant shores. The Americans are not great at fostering innovation in their banking ecosystem. And so I took a lot of heart from the new bank startup unit and from Monzo's success in particular. And so when they received authorization with restrictions, I sort of perked up and thought to myself, okay, well, if Tom Bloomfield can do it, he's a nerd, I'm a nerd, let's go do this. And it took us 5 years, but we have indeed done it. And so what we do at Griffin is we bank fintechs broadly. So generally that means we're banking payments firms, wealth firms, but also unregulated companies that want to particularly tend to be looking at offering some sort of savings account product. And so I think that one of the things that the higher interest rate environment has sort of driven home for us is there is a real distinction between what we think of, and I'm sure our colleagues at Clearbank think of as sort of true banking as a service, and what a lot of players calling themselves banking as a service providers have been doing over the last 5 to 10 years, which has realistically just been sort of payments as a service. So issuing prepaid cards, facilitating payments, virtual wallets. Whereas for us, the avenue to sort of delivering value relies very heavily on us actually being a bank, right? And so we're paying interest, we're providing credit instruments, we are banking firms that must work with a commercial bank and so cannot work with some other sort of non-bank provider. And so that's kind of how we see the space broadly. And I think there are a couple sort of ongoing regulatory themes that I think are really indicating that has been the right strategy. We definitely had to go through a pretty prolonged period of, at a minimum, like investor skepticism that getting the bank license was worth it. But I think increasingly regulators on both sides of the pond seem very wary of the layering upon layering of middlemen between the sort of the ultimate consumer or corporate and the banking provider in terms of what that means for risk management. And for those who are looking at what's happening in the US with Synapse's bankruptcy, how things can be resolved when they go wrong, which is always, of course, sort of top of mind for the regulators. So we see the future of sort of banking as a service and embedded finance as one in which banks have a really foundational role to play, because ultimately, as much as like I'm a child of the financial crisis, like I graduated in 2009, so it had a pretty profound impact on my professional career. As much as the financial crisis sort of destroyed the reputation of the banking system globally, fundamentally, people really do trust banks. Like, they don't trust them to behave ethically, but they do trust them to watch their money. And that level of trust, like, is an incredibly, incredibly powerful thing. All right, I'll shut up, stop my ramble there, and let the others chat.
Very interesting in terms of what you've built and proud of it, yeah? Paul, moving to you, embedded finance. First of all, very few people understand what an embedded finance is and what kind of use cases can help banks significantly improve both its customer engagement, which is key to the success, as you heard me in the morning, and driving the business operations. So if you can just explain us what's embedded finance, how is it different from the regular financing and financing products?
So actually, I can testify David's always dressed like this. I've known him for many, many years, from when Griffin was an idea on a piece of paper. So very pleased to see Griffin doing extremely well, right? It was indeed in Royal Exchange. So look, embedded finance, if you Google that, you're going to get something in the region of about 13 million results. And I can guarantee you every one of those results, when you ask for a definition, will be fundamentally different, right? Some say it's credit related, some say it's financial services holistically, some say it's banking, some say it's savings, all these things. I don't think it really matters as a definition. Some will even call it embedded banking as well, right? What we have to remember is it's just simply embedding financial services, whether it's bank accounts, whether it's payments, whether it's credit. It can go as far as embedding FX. It can go as far as, if you include insurance as part of that financial services definition, insurance, right? So it's embedding a financial product of some description in somebody else's digital ecosystem or digital journey that solves a specific problem. Okay, so that's embedded banking, embedded finance at a kind of super level. Underneath that, you've got banking as a service. And this is the way that Griffin and Clearbank have ultimately solved this, because we've decomposed a bank into its primitives. And a primitive is how you hold money, how you move money, how you transform money, brackets FX, how you lend money, and ultimately, potentially, how you invest money. They are the 5 things that a bank does, and that's how people, to David's point, gain trust in a bank. So that's where the use cases are beginning to evolve around those 5 principal areas. Now, payments, that's kind of done, right? In the retail B2C space, that's largely done because it's all about the checkout experience. We've done it in e-commerce. If you think about when payments started, did anyone know when the first online payment was completed? 1996 by a British company called eCash. Do not look it up on the internet, because you will now get something incredibly dodgy if you Google eCash, right? So don't look it up, particularly not on corporate machines. But that shows online payments and adding it into somebody else's ecosystem has been around for a long time, right? even if you look at what actually is embedded finance, this is a lecture I give at MIT and Harvard. When was the first embedded finance proposition ever created?
Car dealerships?
No, a little bit older than that, right? Let's go all the way back to it being non-digital, right? The Medici family, 14th century, they invented embedded banking. What did they do? They originally had a bank in a castle. Safe, secure, moats, drawbridges, and all that stuff that goes with it. Then they had the brainwave. It's a lot of effort to keep getting all the tradesmen to come up to the bank every night and deposit their funds. So they put a table in the market square, guarded, to enable all the merchants to deposit their funds on that, and then give them foreign exchange or whatever it is, different Italian provinces exchange money. But they put banking at the heart of the problem in the ecosystem that it needed to be performed in, i.e. the marketplace. That's embedded banking. It just so happens that David and I now do this, and arguably Starling to some extent, in a digital ecosystem, the online world, hence why 1996 eCash formed. So payments has been a really interesting area to start out in. You could even argue cards for that matter. But as you start to dig deeper into the problems that people actually need to solve using the internet is, how do I store value? How do I use wallets in a unique way to solve some of the complexities of business operations? How do I use credit to improve the flow of funds? All these and FX for that matter as well. You know, I'm a merchant. I might want to pay my clients out in their native currency rather than the currency I prefer to use. I can pay in my currency, and through a digital wallet, the client can withdraw that in their local funds, the FX being done in a digital wallet. Again, that solves a unique problem that a merchant may well have. So these use cases are beginning to pop up, and they're actually quite unique per company. So I used to advise the board of Uber in Europe. They had a wonderful problem in the US. They put bank accounts for drivers. Great idea. Work to treat in Canada as well. It's also worked remarkably well in Turkey, of all places. But actually, they also tried to launch it in the UK. It failed. Why did it fail? Because actually, the problem didn't exist in the UK. It just was geographically specific to the US, Canada, and Turkey. So when we look at use cases, there's so much more than just saying it worked in this geography, let's transport it into this geography. We actually have to think about the customer segmentation, the job that needs to be done, the design service and layers and the user experience that needs to be embedded around all of that to actually then make banking work. But you can't do any of that, and you can't put banking at the heart of a problem and solve that problem unless you've got platforms like Griffin and Clearbank. So that's kind of giving you a sense of where the use cases are.
Interesting. That makes it very, very clear statement about embedded finance from the Clearbank. Wonderful. And moving to Priya, and Priya, you've been doing a very interesting and a different work over the last few years. So if you want to share, first of all, what an Earth ID does, and more importantly, when you look at the compelling and futuristic use cases for this decentralized kind of an identity solution, now, what do you see in open banking? How does it impact?
Right. So the challenge with word futuristic is that it changes meaning in every new jurisdiction. So what looks really good in Europe right now is so far-fetched and futuristic in UK. What's available in UK might be far-fetched in other geographies. And I think those are some of the challenges. And if we talk about decentralized identity and what it enables, then I would say streamlining and securing consumer finance is the biggest futuristic view. But for our audience who don't know decentralized identity is, if I can shed a little bit light on that, then as the name suggests, the premise is that how do you move away from these centralized data stores of personally identifiable information that are really prone to data breaches, hacks, etc. They actually become honeypots for cyber attackers. So the idea is you remove your personally identifiable information from these honeypots and then you decentralize that storage. As the previous fire chat person mentioned, there are numerous ways to implement a technology, and so is for decentralized identity as well. You could use cloud, you could use distributed storage. The way Earth ID does it is through personal identity wallets, and they utilize the storage of your mobile device so you become the owner of your data. Whatever your credentials, IDs, biometrics are there, they're securely stored in a wallet. When you share that information, you consent to it, and when you like, you can revoke the consent. So imagine a futuristic world again, wherein you are in charge of your data. You exactly know who has your data, for what purposes, for how long, and when you like, you can actually take that control back in your hand. That's the futuristic view we're looking at. If I extend that, for example, from an open API perspective, open finance perspective, then what we're looking at, I want to bank with, let's say, Starling or Griffin Bank here. I like the lending facility of another bank. I like the mortgage facility of another bank. Currently, what do I have to do? I would have to do a KYC with one bank, then the KYC with lending facility, with the KYC again with the mortgage facility. The view we are enabling is that you have the identity in your wallet. The wallet does the identity verification, so it would check your identity card for validity, authenticity, tampering, and ownership. When you share that information, the banks already know that this is a pre-verified information, so they're happy. But what it also means is reusability of that data. So there is a blockchain trusted layer that ensures that these are tokenized to ensure this person was KYC'd at this point, and hence this data that I'm receiving is good. So the mortgage facility does not have to do the KYC again. The lending facility does not have to do KYC again. And to that world, the open AIs would get integrated to this identity and then streamlined access to all of these services users can get. And that's the view I'm looking at.
And Priya, this, again, you spoke very clearly about different markets at different level of futuristic situation. So when you take this concept into some of the other markets and talking to, let's say, Africa or Middle East or Asia, do you see an acceptance? Do you see, or you see a different challenges?
So first I would like to talk about Europe, because Europe is the most advanced in this sector. So Europe launched approved EDAS 2.0 and unanimously approved the use of digital identity wallets in April this year. What this means is by 2026, every citizen should have a digital identity wallet wherein they can store their credentials and hence avail services via that wallet. So with that, I mean, Europe has done this digital data strategy, established that strategy. They want a single digital market wherein interoperability thrives, data sharing thrives, and all of that. And if we look at, for example, other jurisdictions, if I look at Aadhaar for my friends from India here, then Aadhaar did pretty much similar as well. However, the only difference is it's not a decentralized mechanism, but they did an Aadhaar, then they implemented identity wallets on top of it, which somehow takes the decentralization in practice, and they have evolved as well. The world in UAE, APAC is very, very receptive of decentralized identity and the wallets. Where we are trying to find adoption, which we are doing now, is within the UK, the US space, etc.
Interesting. So futuristic is similar across markets, it's just the different shades. Moving on to you, you've been most educated person about, you heard since morning open APIs, what power it carries. Now, when you look at the open APIs and how important it is, and if you have an advice for the bankers, you have CEOs in the room, what would be your advice on how can they monetize and leverage the APIs?
Good afternoon, everyone. I'm wearing a suit, not because I'm a banker, just because it makes me look a little bit slimmer, I think, with a waistcoat. So I think, first and foremost, if you think about what open banking is all about, and open finance, open data, it comes about making choices. So it's really understanding your customers in the detail, and then making sure that you are customizing the journey as much as you can with the data that you have. And the more data that the banks have or the financial institutions have, they can really understand the customers at another level. Obviously, we heard Starling, they take that is number one, is around the customer. Staff, first, then customer. But it all leads to the information that you have is to build your products of what people actually need. And I think before you can even start that process, you have to start thinking about commitment. With open banking, open finance, smart data that is coming soon, you kind of, I think there's a lot sitting on the sidelines that is looking to see how it plays out. And you've got those that are leading the way, embracing it, investing in it, to really make it work because they can see the direction of travel. And so I think those that truly commit, the culture within the organisation changes, because all of a sudden, rather than seeing it devaluing the opportunity or eating away margin, the people in the organisation realise that that's the direction of travel. So we will start to innovate. We will start to see the opportunities rather than what we're going to lose. And those organisations that can kind of pivot and embrace that, I think will come out stronger, and they will be the thought leaders. And so I think we're at a point within the UK to, I would say, gain some more momentum. I know we're kind of in a situation right now with obviously a snap election being called. So there are some things that are pending, but there's a real, I think, desire across parties and also across industry to really try and make financing, banking, and also bring all the data from different parts of somebody's life to be able to offer really innovative products for people that are vulnerable, businesses that are potentially a startup will have different pain points than a mature business is looking to scale. And you can start to see that when you join all the data up. You can see if someone's going through cash flow issues, somebody's gone through a divorce. You can start to bring all these data points into a holistic view, but you have to care about the customer at the same time. So it's not just looking at data and ticking boxes. You have to be customer-centric in order to get the right outcomes. So hopefully that just gives you a little bit of kind of how I see things. And this is more probably me than OBL. This is how I kind of join the dots up. And so I think we're at a really exciting point within the UK. We just need now some levers.
Very interesting, right? So going back, David, to you, you spoke about BaaS, your colleague spoke about embedded finance. All these new models, which didn't exist as we saw in a pure banking world before, do you see this can enhance financial inclusion and make banking available to the larger forum and communities which hasn't have an access to the banking?
Yeah, absolutely. I think fundamentally it kind of comes back to the question of what are banks good at, right? And ultimately a bank is an engine for managing risk around capital and liquidity. And in that very abstract sense, like, the customer doesn't really have a role to play, right? Like, that's not a thing that a bank is good at. I often joke that, like, a bank is a speculative investment vehicle masquerading as a payment instrument, right? Like, for the bankers in the room, right? Like, you mostly are thinking about how does my balance sheet work? Like, the thing that drives the business is the balance sheet, maybe payments, right? But from the customer's perspective, they don't care about that at all. I mean, maybe they care about some small fraction of that if they've got a loan with you or something. But really, they're just like, I want to be able to use my debit card when I go to the pub. I want to be able to buy a pint and not have to worry about it. And I trust that my bank will sort me out on that. And so there's a gulf in expertise and what the customer expectation is. And so I think one of the things that's really interesting is that over the last, let's say, 30, 40 years, right, like, people basically chose their banks purely on cost. And I would say that started to change maybe 10, 15 years ago. But historically, you're like, I'm going to pick my mortgage based on who offers me the best rate. Yeah. I'm going to pick my current account based on, like, is it free? And, like, probably, like, what do my parents use, right? Like, or what does whoever set me up with my first bank account use? The downside of that is that if you are a bank and you're forced to compete on cost, you will be ferocious about identifying things that you think of as cost centers and then cutting them to the bone. And so the net effect of that was, like, this 40-year slide in customer service, in branch presence, in actually kind of quality, essentially, right? Because if all the customer cares about is price, you shouldn't be caring about quality. And I think we're seeing a sort of generational shift away from that mentality on the part of consumers. And so increasingly, the consumer, kind of regardless of who they are, has a basic expectation that they're going to be treated well, right? And that the service that they're going to receive is appropriate for what they need or want. And banks, as a sort of legacy of this 40-year transition, are not well positioned to take advantage of that. But they remain really well positioned to manage capital and liquidity very efficiently. And so there's an opportunity for the sort of new generation of companies, and they can be fintechs, but they don't have to be, to really focus much more tangibly on how do I generate value for the customer. And the nifty thing about that is they don't have to be good at managing capital and liquidity, right? What they need to be good at is delivering a superior customer experience and finding a partner that is very good at managing that capital and liquidity. And so both parties are then able to really play to their strengths. And this, I think, is really beautiful in that it allows the banks to invest less in something that is very expensive that they're not good at, which is trying to acquire customers, maintain customer service, maintain a global presence, while also ensuring that a much wider range of customers are well serviced, because you can have much more targeted distributors, for lack of a better term, that are really zeroing in on particular use cases, particular demographics, underserved communities. And underserved communities can be everything from, like recent immigrants to like extremely niche businesses, right? Where it's like, we've talked to a company that's like, we specialize in making sure that influencers in Southeast Asia get paid by the brands that employ them in a timely manner. And it's like, this stuff is awesome. So yeah, I think it's, the reason that I'm so bullish on the space is that I ultimately believe it leads to superior customer outcomes, like for society writ large.
So it's a different inclusion, David, which you're articulating. Interesting.
I'm not just focused on Southeast Asian influencers. Let's be clear.
So moving, Paul, to you, with embedded finance solutions coming in, a different side of regulatory challenges, is seen on how to regulate this, and for banks which implements this, where you don't have a full control over the journey because you're embedding your solution into a ecosystem partner. How does bank navigate through this? Because always doing your own compliance was so difficult, and now doing compliance with an external party included in it.
So I'll have to go back to my former life. So I was responsible for building HSBC's entire banking as a service and embedded banking and banking as banking platform back in 2018, and scaled it in 2022. And the biggest worry we had when we get shipped out to Washington to talk to the SEC and the OCC and any other acronymed regulator in the US was, how much control do you have over your partner so that they don't create things that they shouldn't be creating? And the only analogy we had as to how good or bad embedded finance could be is a Petri dish, right? So if you put all those 5 components of a bank in a Petri dish and you shake it around and incubate it for a little while, you open it up. To David's point around customer experiences and that, you can get some amazing outcomes. You could create penicillin for banking, theoretically, using this analogy. The other problem is you can create Ebola at the same time, not realizing. And you create detrimental client experiences, right? So where the regulators have turned around to us and said, well, actually, you've got to be on top of your game to make sure that your embedders can't create those negative experiences. It's your license that's on the hook, right? So David has a license, I have a license, right? So we've got the same regulatory regimes running us as any other bank in the world, or in the UK that is in particular. We're in Europe soon as well. But so we cannot absolve ourselves on those fiduciary and regulatory responsibilities. So when we talk to a client, we say, okay, you're going to have these guardrails. You have to give them training wheels on how to apply this stuff. You do that through the API governance, you do that through compliance governance, but actually there's another layer that's increasingly becoming important, particularly in the US, and that's the service layer. Oh. So when I deployed previously at a major ERP company, an ERP brand that you would probably undoubtedly all recognize, but I can't say who just at the moment, we've had to go through and security check every one of their frontline operatives who are going to be talking to their clients, even though they're not bankers, they're software salesmen and accountants. Try telling an accountant they need to be financially crime checked. That's quite an interesting conversation. We've had to check every one of those consultants, salesmen and accountants that they, even if they touch on the conversation of, would you like to open up a bank account that's dovetailed straight into this ERP system, branded as the ERP system, that they are now under a regulatory governance standing. Right? None of them had ever thought about that in the past. So these are the sorts of regulatory things that an embedder and a bank provider providing BaaS and embedded finance solutions have to consider. We have to build the training into this. We have to build the rule book. We have to provide the guidance so they can't go and create something without our knowledge. It's not a fire and forget model. All right? We can't give you a platform and go and create whatever you want, fire and forget. We have to be there every step of the way to make sure it's controlled. But the embedder also has to have a responsibility. They need to know they're making a better outcome for their customers as well. That also aligns to financial services banking regulations. In the UK, consumer duty, we have to apply that all through the value chain. So there's a lot of components there that we have to consider.
Interesting. So it's seeing the value chain and also training as well as communications. And then, of course, the governance piece, which you spoke about. Priya, coming back to you, you spoke about the whole distributed identity now with the framework like financial data access coming into the UK market. How does this change the game for your solution, especially when it is to be utilized by a BaaS or a embedded finance provider?
It actually strengthens the case for decentralized identities. So last year when I was here, we were talking about open banking. And then I said that, well, we always debate about this, that whose data it really is, right? Whether it's bank's data, it's an individual's data, and whatnot. And then now, as we're realizing, as the regulation is moving, Wayne talked about customer-centric, right? So everything is now about user. How do you ensure that user consent is baked in? It's not implicit, it's always explicit. And how do you ensure that speed versus security question as well, right? So last year when I talked about that for open banking, decentralized identities are really important because they ensure the security, they ensure the transparency while enabling that immutable record of traceability and auditability. If we talk about FIDA, if that's what I can call it, then the basic principles for that is, for example, consent, that user should provide the consent that my data is being shared. It should be portability. The data that is being held should be used by another service provider as well, so that they can provide another service to the user. Then it's about transparency. User should understand that you had my data and now you're giving that data to somebody else, so that they can either provide the service or utilize that data to do some reporting or anything like that. And then finally, it's about that. How do you ensure the security of the overall system, right? How do you prevent that data which we have accumulated over years, or we're habitual to accumulate over years, protected from the data breaches and hacks? So all of these, when they combine together, and then you look at it, then decentralized identities, use of personal identity wallet actually ticks each one of those principles, and hence the case for decentralized identity is really, really strengthened with respect to these new regulations. When PST2 happened, there was a lot of work happening, and then when Brexit happened, we assumed that, okay, now what would happen, right? So now I'm assuming with respect to FIDA, the other regulations with respect to the developments that are happening in the European Union as well, the decentralized case and the use of user-centric identities would only increase.
Interesting. So again, my next question is to Wayne on the exactly same which you heard with both FIDA as well as DPDI in Europe. With these regulations coming in and financial institutions are in a balanced situation to go for customer data and create a data-driven insight and then propose a solution versus the whole data protection and your ability to take a consent and approach customer. How does a financial institution balances these two very different paradigms?
I guess I'd like to start with the consent, obviously the data that is held, and the governance around treatment. So it's imperative that is at the heart of every business. So I think the first sort of thing to really consider for any organisation, I know the larger banks obviously have deeper pockets, larger teams, but when you start to look at the smaller organisations within the food chain, they need to really heavily invest in governance and making sure that their policies, whether it's DORA that's coming soon, whether it's GDPR, but that's at the heart of their business. And rather than see regulation as a sales prevention tool, or a blocker to go to market. I think they need to invest heavily in understanding the regulations, understanding what you can do, what you can't do, and the bits you're not sure, you need to work through and get and bottom those conversations out. And they will be challenging. But I think once you understand what the regulations mean to your business and look at it from multiple perspectives, don't just look at it from a tick box exercise, or somebody said earlier, meeting the minimum requirement. At the end of this is your consumers. If you have a data breach or you lose trust, you lose your business, and it can happen pretty quick. So I think if you reverse engineer it and really look at what regulations are saying, how can you use it as a facilitator to fine-tune your own systems, platform, and governance, you can then start to think about how can you use it. And so then you can build you've got confidence within your team then to say, you can focus on innovating, on selling products, because I know that the processes, the platform behind me will be there, is robust, and can also be used if you had to prove something to the regulators. And then you can really start to spend your investment on new products and services that really solve problems. Because that's what we're here to do, it's solving problems. And open banking, open data, and smart data, they're all going to solve problems. And those that really kind of zone in on that will obviously make probably more money. But more importantly, if you put the customer at the center of that, you're saving people's problems. You are making better innovation and choices for consumers and businesses. So it all comes back to, I think, trying to free up organizations with the regulations to truly understand it. And I think that's at the heart of all of this. That's how I kind of view it.
So it's simple, it's keep customer at the center of it, yeah? So last rapid fire question for all of you, and it can be in any order. There's one biggest thing or innovation you believe with all these changes happening from a digital, what you believe is the one single largest innovation?
I would really love to see kind of global decentralized identity. I've got to say, I mean, it's like, it might, I mean, I'm sure there are a lot of people here who do a lot of travel. Like, as an expat, the fact that I have two completely distinct identities that just happen to manifest in this flesh and blood person sucks. Like, and it's just, it's not good for the world, right? And all it requires is a little bit of like will, collaboration, government incentive. I don't think that this is something that could ever have been solved by the private sector by itself. So seeing, you know, Europe really line up behind this, I think is super exciting. And, you know, some of the work that's going on in India and elsewhere is like amazing test cases in terms of like how we can make people's lives easier while also, you know, leaving kind of informed consent at the heart of it.
Interesting, to decentralized identity. Paul?
If I can just, thank you so much. If I can continue to that, I mean, that makes so much sense. Sometimes it's just bizarre that why do I need passports? Why do I need driving licenses? My identity could be, for example, one identity, but there could be different flags associated to it. Can I travel to Spain? Yes, I can. Can I drive? Yes, I can. So I think those are the views that I completely resonate, and that's the ultimate futuristic vision that we're after. But my innovation, I'll let Paul.
Paul?
So I think the future of innovation in our space, right, I'll take it on a completely different level. I think it's atomic level personalization through the platforms that we can offer, right? When I say atomic, right, we all talk about hyper personalization. That's still pretty boring. It's pretty much a bank still saying, hey, we've got localized things that we can do to make it personal to you. What if I, as the customer, define the experience I want every time I go in? On a Monday, I want my experience to be this. On a Tuesday, I want it to be that. I'm feeling a bit down today, so make me happy, right? That's the sort of experience layers that I think we'll get to in years to come, right? A real atomic level, kind of in tune with you as an individual and the platforms you're using.
Interesting. So atomic personalization. So Priya, you stay with your choice?
No, without being actually greedy, I wouldn't talk about decentralized identity. I want to talk about user-centric innovation. And why do I say that is because there are numerous ways of implementing a single innovation. So I don't want to deep dive into technology, but I want to talk about the approach. So challenger banks thrived, right? Why did they thrive? Because they knew that what do users want? Faster, cheaper, better. And that's why they were likes of Barclays, no disrespect, NatWest, HSBC, etc. And yet Monzo's, Revolut's, Griffin, Clearbank, etc., they're all thriving, right? Because they know what users are wanting and they're developing what there is. If I have to specifically talk about technology, then privacy preserving verifications is something that I absolutely love. I want to prove that how much affordability I have. I don't want to share my bank statement with you. I should be able to do that in a privacy preserving fashion. I want to prove that I'm over 18. I don't want to give you my identity card. That's what we enable at Earth ID as well. So that's my new favorite thing.
Interesting. Wayne, coming to you.
I'm kind of going to cheat a little bit. I think there's two things for me. I think consent is at the centre of all what we're talking about here. So holistic consent management would be superb to know what's active, what's about to expire and revoked, and what consents have I consented to. So I think in the long term, I'd love to see granularity on consents that's really easy for the end user, and give opportunities to business to be able to continue those relationships, knowing that a consent may be expiring. So it is not just reactive, it's proactive. So I think there's some good opportunities there. I'm going to be selfish and talk about the open banking space in the UK. What I would like isn't so much a technology, but obviously we're waiting for the Data Protection Digital Identity Bill, which obviously didn't make through the last round of the wash-up. And so we will sit and anticipate whoever obviously takes 10 Downing Street will pick up that and resurrect, and obviously we'll start to see the benefits of that, because all the stuff you guys are talking about, all the technology you have, that's the enabler. And so when that lands, all you guys can work the magic, and obviously we can see better use cases, better outcomes for people. So I really look forward to that. Thank you.
Excellent. So it's been a fantastic listening to the panelists, and clearly there is a lot to look forward to in terms of innovation. And I really believe all the ideas which you have around the table, right from embedded finance to banking as a service to decentralized identity and how to leverage the open banking APIs, I think the key message we all heard is customer is at the center of it, and users who are sharing the information, the whole consent framework needs to get implemented well. That's what the regulators are also trying for it. Yep. Thank you so much. Yeah. Pleasure.